Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate speak. Today we're diving into a proxy statement, which usually means a whole lot of boardroom talk, but we'll try to find some interesting information here. Stick around because this one has a plan for a possible reverse stock split, and that's not something you see every day without some serious consequences. Basically, this document outlines what shareholders will vote on at Nuwellis' upcoming annual meeting. It covers everything from electing directors to a potential reverse stock split that could impact the stock you own. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for more discussions. First off, it's important to note that this filing is actually a revised version. Nuwellis had to refile because they missed tagging some data correctly the first time, so no changes other than some technical stuff. The main purpose of the annual meeting in May is for shareholders to vote on several key proposals. We're talking about electing directors, deciding on a potential reverse stock split, and ratifying their accounting firm. Proposal 1 is about electing two Class 3 directors to the board, John Erb and Gregory Waller. Directors serve for 3-year terms and help guide the company's overall strategy. The board recommends voting for both of them. Next up, Proposal 2 is the big one, a potential reverse stock split. This means the company wants the option to combine a certain number of existing shares into one new share. The ratio could be anywhere from 1-for-5 to 1-for-70. That is, for every 5 to 70 shares you own, you might end up with just one. It's up to the board to decide the exact number if they get approval. The main reason for considering this is to keep Nuwellis stock listed on the Nasdaq stock market. There are requirements to keep your stock on the stock exchange, and one of them is the stock price should not be too low. And a reverse stock split is often done to artificially raise the stock price. Proposal 3 asks shareholders to ratify Baker Tilly as their independent accounting firm. It's like giving a thumbs up to the company that checks their financial records. Again, the board recommends voting for this proposal. Finally, Proposal 4 is about authorizing the meeting to be adjourned or postponed if they need more votes to approve the reverse stock split plan. They want to make sure they have enough support before moving forward. This proxy statement includes a diversity matrix of the board. As of now, there are 6 members of the board of directors. Of these, 2 are female and 4 are male. When broken down by ethnicity, we see that the majority are white, although one director chose not to disclose their demographic background. The company reminds its employees and directors about their insider trading policy, designed to prevent any illegal buying or selling of stock based on confidential information. People are not allowed to benefit from information the rest of the public does not know. Let's quickly glance at director compensation. In 2024, the board was paid about $300,000. John Erb, who's the chair, made $49,300. Michael McCormick earned the most at about $60,000. These numbers are fairly standard for board members of similar companies. Now let's peek at the executive compensation, focusing on 2024. For example, the president and CEO, Nestor Jaramillo Jr., had a salary of about $350,000, but received nothing in option awards or bonuses. Looking at stock options, it is shown that Robert Scott, Chief Financial Officer, owned a substantial number of stock options at the end of 2024. Let's see the pay versus performance. For 2024, summary compensation for the PO was about $410,000, with compensation actually paid a little less. They also had a small net loss of about $11 million for 2020, which isn't great, suggesting a tough year for investors. So for 2024, even if Mr. Jaramillo had not received any option awards that year, there was actually a negative sign here, meaning there was a drop in the option values by about $10,000. The board included an entire section for the reasons they might want to do a reverse stock split and any number of reasons it might be bad. They also include a risk that if the stock is delisted, it may be hard for stockholders to obtain accurate stock quotations or trade them at all. Now, what do I think? Nuwellis is navigating some choppy waters. The potential reverse stock split is a big red flag suggesting they are struggling to maintain their listing status. While the board is presenting a united front, these kinds of moves often come from a place of financial anxiety. The executive compensation seems fair, but the lack of bonuses tells a story of missed targets. The company needs to pull off some big wins, whether it's through strategic partnerships, new product successes, or significant cost cutting. Okay, that's the breakdown of Nuwellis' proxy statement. What's your take on the reverse stock split? And what do you think it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussion. Thanks for watching and see you next time.